Opendoor stock opened the week with a bang. After a shaky open at just $4.11 per share, the stock surged all the way to an intraday high of $5.19. By the closing bell, it settled at $5.09, up 64 cents, or more than 14% on the day. That's an incredible start to the week, especially when you consider that the broader markets were generally down. The fact that Opendoor managed to climb against the grain shows two things. First, it highlights just how much retail enthusiasm is powering this stock right now. And second, it suggests that the stock has broken through to a new psychological level, firmly above the $5 mark for the first time in years. If we were waiting for confirmation that this movement has legs, Monday's action may have been exactly that. Now, what made Monday so fascinating wasn't just the price action. It was the narrative swirling around the stock. Eric Jackson, who has become almost a mascot for the retail investor movement around Opendoor, posted a few video updates from San Francisco. He explained that he was traveling to meet with members of Opendoor's board and hinted that we might get some updates later in the day. That's significant because Jackson has consistently been one of the loudest voices in the retail camp, pushing for board accountability, transparency, and stronger leadership. The fact that he's now in the same city as board members, and possibly meeting with them, adds a whole new layer to the story. Even if nothing concrete comes out of these meetings, the symbolism is powerful. Retail investors aren't just tweeting from the sidelines anymore, they're showing up in person. Meanwhile, Keith Rabois added his own twist to the story. Rabois, one of Opendoor's co-founders and someone who has been vocal online about what the company should be doing, made a couple of cryptic posts on X. He seemed to be disparaging the board and even hinted at frustration with Opendoor's reliance on consultants. While he didn't name names, the implication was clear. Rabois doesn't think the current board is delivering the kind of vision and execution that Opendoor needs. For retail investors, this kind of commentary is fuel for the fire. It validates what many of them have been saying, that the board has been too passive, too reactive, and not nearly engaged enough with either strategy or shareholders. So let's put this together. On the same day that the stock makes one of its strongest moves in recent memory, we have Eric Jackson physically on the ground in San Francisco, potentially engaging directly with the board. At the same time, we have Keith Rabois publicly criticizing the board's performance. This convergence is more than coincidence. It feels like pressure building toward a breaking point. Something has to give. Either the board embraces the energy and vision that retail and early founders are pushing, or they risk being left behind by a narrative that's already outpacing them. From a trading perspective, Monday's action also tells us a lot. The stock opened weak, dipping down to the low fours. That could have been the beginning of another pullback, but instead, buyers stepped in aggressively. The stock ripped nearly a full dollar higher, touched the $5 range, and held most of those gains into the close. That tells us that the $5 level, once a ceiling, may now be flipping into support. If the stock can consistently hold above $5, the next ranges to watch are closer to $6 and even $7. What makes this rally even more striking is that it happened on relatively strong volume compared to last week's consolidation. That means it wasn't just a few big trades pushing the price higher, it was broad participation. Retail investors were piling in, institutions were likely covering shorts, and momentum traders joined the party. This kind of volume-backed rally is exactly what you want to see if you're bullish, because it suggests staying power rather than a one-day spike. Let's also consider the psychology of the moment. Opendoor has been stuck in the $1 to $3 range for much of the past year. Investors who bought in during those lows are now sitting on huge gains. Some of them will inevitably take profits, that's normal. But what matters is whether new buyers continue to step in and absorb that selling. Monday proved that they are. For every seller locking in profits at $4.50 or $5, there's a buyer willing to pay that price because they believe in the story going forward. That's the definition of resilience. Now, what are the key things to watch as we head into Tuesday's session? First, any updates from Eric Jackson. If he meets with members of the board or even just takes a photo at Opendoor's headquarters, it will flood retail channels with energy. That kind of imagery, retail face-to-face with leadership, could be symbolic of the retail activist influence becoming institutionalized in Opendoor's story. Second, keep an eye on Keith Rabois. His cryptic posts may not seem like much, but Rabois has credibility as a founder and as someone with deep roots in Silicon Valley. If he continues to criticize the board or even openly advocate for change, that could be a spark that pushes this narrative even further. The possibility of Rabois returning to the board, even in a consulting or advisory capacity, is the kind of speculation that markets pay attention to. Third, watch for insider activity. Interim CEO Shrisha Radhakrishna already made an insider purchase that boosted confidence last week. If more insider buys are disclosed, or if Shrisha follows through on his promise that other board members will invest personally, that would be another strong catalyst. Insider buying is one of the clearest signals of conviction, and retail will seize on it immediately. Fourth, keep your eye on technicals. $5 is the battleground right now. If the stock can hold above it, that's confirmation of strength. If it dips below but quickly rebounds, that's still a bullish sign of buyers stepping in. Only a sustained drop back into the low fours would suggest the rally is fading, and given Monday's action, that feels unlikely. Finally, remember the bigger picture. Rate cuts are still on the horizon, and when they come, they'll provide a macro tailwind for housing-related businesses like Opendoor. The company's pivot toward an asset-light, AI-driven model is still in its early stages, but the groundwork is being laid. And the retail hive mind, the so-called open army, continues to provide not just energy but actual strategic ideas that management seems increasingly open to considering. The takeaway here is simple. Monday's rally wasn't just about price. It was about narrative. It was about retail, leadership, and founders all converging in different ways to shape the future of the company. That's why I remain bullish. Because this isn't just another meme stock pump. This is a movement with substance, backed by insider alignment, retail activism, and founder validation. So as Tuesday's session kicks off, keep your eyes on the $5 level, watch for updates from San Francisco, pay attention to Rabois' next move, and look out for any insider buys. All the ingredients are here for this rally to continue, and if they align just right, the next leg up could come sooner than many expect.